making money is different than keeping the money. And today you're here for a treat because this is one of the highest voices on the space, and I'm very honored to have you here, Steve. I admire you a lot, and I'm a big fan of you, the way you think, and you know it. So to sum up to our guest, just to give you an idea, Steve, he was in a private investment manager for 44 years, and personally was managed around 325 individual portfolios in the United States and abroad. So one of the very few investment book authors who have directly managed other people's money. So, Steve, I'm so glad that you dropped by. And my question for you is the following: what are the 5 steps that you recommend entrepreneurs in order to keep the money, in order to become a good investor? The fact that they are good entrepreneurs, that doesn't mean that they're a good investor. So it's not fair that entrepreneurs work really hard and then after they make the money, they may put decisions in the investment because they only know how to invest in their own business because they control 100% of it. But when they put that resources in other people, they don't know how to do due diligence. They're not such an amazing investor like you, and it's sad. All the work is gone, and they don't deserve that. So, what are the 5 steps that you recommend, Steve?
Welcome to Entrepreneurs Are Leaders podcast with Harry Sardinas. Interviews with world's most influential entrepreneurs that share tips about how to grow your business exponentially. Charismatic speaking, leadership, branding, marketing strategies designed to help you monetize your knowledge, find true happiness, and manifest your goals and dreams.
Well, there are 5 steps once they make the initial decision, like you said. And like you said before, when we were kind of warming up for this, how you said, there's the successful entrepreneur. Things are going along good. He's growing every year. His message is getting out there. The products are selling and so on. And times are fine. But what happens if we have a COVID and all of a sudden nobody's out there shopping? Nobody's out there buying your product. And now you have to say, how am I going to survive this? I don't know. It's only going to be 2 months. It could be 4 years. It could be a whole big deal. And if I go out, how am I going to raise the capital, go back in again? So I've got to prepare for that. I've got to make sure I have multiple cash flows, multiple streams of income. So while I'm developing my business, I need to also develop almost what you'd call my personal insurance policy, my cash flow, my personal cash. I got the business cash flow, but that depends on customers. That depends on other people taking my product, calling me up, asking for advice or needing legal assistance or whatever I'm selling.
Especially 0 to 1 million, Steve. 0 to 1 million. If you don't have a customer, you don't have a business. Depend 100% of the customer, and at least from 0 to 1 million, right?
Right. So I go back, I guess, to what I did, what got me started on the road. And, I started on my road, entrepreneurial road, when I was about, 34 years old. But how did I get to the point where I could say, I'm not going into New York anymore and working for these guys who don't appreciate me? I didn't have a business, but I created a business while I was employed by somebody else. And it was based on, when you do something like that, you got to tell your honey, I don't have a job anymore. I'm going to try to do this. And she's going to chop your head off before you could go any further. But I said, honey, you see all this money I'm making on investing the way I do? It's 4 times what I'm making commuting to New York. Wouldn't you like to have me home for dinner every night at 6 o'clock instead of wondering if I'm even going to get home by 8:30? So here's what I've done. I've developed this system where I'm making all this cash. It's coming in, it's dividends, it's profit taking stuff that I've been developing for the last 5 years since 1975. And it's working. You've seen it. You've seen the vacations we've gone on already. You're driving a Mercedes for Pete's sakes, you know? So we got this. We got this. We don't need me going to New York anymore because I going there doesn't make me money. It makes somebody else money. So so I've got two streams of income. We're going to go back to one stream of income. I'm going to develop a business and then we'll go and do multiple streams of income. And that's what we did. So the first thing to do is let's say you were a business owner in that same scenario, but you had to go to to your job and get it done. You couldn't ever leave and you couldn't afford a COVID because you wouldn't have any cash flow then. So you have to, at that point, say, okay, I'm going to take 20% of my profits instead of buying more inventory. I'm going to put it here in an investment portfolio that produces income. I'm not going to listen to the guy when he tells me, oh, we'll make your market value go up. We'll make you all this money. You'll feel so rich. The same thing will happen in COVID. The market will go down and you'll not be rich anymore. But if you invest for income, the income will keep on coming. And that's what you got to do. Now, so there are a lot more than five different points to think about. But the first one is come up with multiple streams of income. But in that area, it's not that simple because you're going to have to find an investment advisor whose employer says, oh, yeah, that's okay. We'll invest for income instead of just trying to grow market value or buy the popular items or put you in this model portfolio that will be this big when you 20 years from now. That's not what you want. You need to find an advisor who says, yeah, I understand you need income. I'm going to put you in any of 10 or 12 different types of investments that will produce income for you. Now, you can't get mad at me because the market value doesn't go up to high levels. It's the income you're going to focus on. And I'll make you happy with that. So that's the first thing, getting a focus on what you want from this investment portfolio. It's your insurance policy that if my business temporarily or permanently gets discontinued, I got all I need to keep my kid in private school or in college. I can take care of my mother-in-law if I have to. You know, all those things that you're doing because your business is so successful, you want to continue to do it. That's what the planning is. That's what cash flow is all about. So then I guess it gets to the point where you have to say, okay, I'm running this business. I got to find an advisor. I got to find somebody who can do this for me with my goals and objectives in mind rather than his goals and objectives or her goals and objectives. So, and this is what I want him to do. I want him to, number one, only invest in high quality, income producing investments. That sounds easy, doesn't it? But if you called an advisor, or you went to your own advisor and you said, hey, Sally, you're running my money here. I want to make sure that I have nothing in my portfolio that doesn't produce at least 4% in income. And you would receive a blank stare.
Mhm.
Oh my, we don't do that here. We have
Mm.
a model portfolio that we know or we think we know will grow in value. And then when you need money, you can sell part of it and use that money. I don't know if it produces any income or not. I've never looked at that. That's an interesting question.
Mm.
But there are closed-end funds, there are ETFs, there are mutual funds, there are REITs, there are business development corporations, there are master limited partnerships, there are and then I can talk about bonds. there are bonds, there are mortgages, there are preferred stocks. There are dozens of portfolios that pay a whole lot more than 4%, that are perfectly acceptable investments of a higher quality than going out and hoping that this next AI company that just opened
Hmm.
its doors is going to be another Nvidia. You know,
Yeah.
that's speculation. What I want is a certainty that my income is going to keep on coming.
Yeah, I think Steve, the reason I'm a big fan of you is because, like I said, my first business in property was a cash flow business. We was renting the properties and
Renting.
renting rent to rent. We were renting the properties and renting them back again. And I realized I had one breakthrough 18 years ago when I started my first business that wow, this is amazing. I don't even own the stock. I don't even need to buy the house. I don't own the house. I'm renting it and renting it after, by
You're
individual
subletting
rooms.
it. Yeah, yeah.
Exactly. Rented it again. And then we're making like 2,000 pound cash flow per month per property
Yeah.
without owning it. And our listeners might think, oh, what Steve thing is what Steve is saying. This doesn't exist, and this is not correct. I know properties. Okay, I know properties that in the last 16 years haven't gone up 1 pound and produced 2,000 pound cash flow.
Right.
Yeah, I got
Exactly.
friends in London that they have those vehicles, and they always tell me, Harry, I don't care when I buy a property. I don't care if it's gonna go up or not. I don't care. I don't look at this. I look at
The
how a stable
much.
cash flow can give me the property. If it's close to a supermarket, if it's close to a facility that I will rent it easy, the metro is close. This is what he's looking because he knows that if the property have all these checklist, it will be easy to rent. And if in the price of the rent is lower than the mortgage, he will have cash flow forever. Now, if the property goes up on price, oh my God, that's a cherry on the top, but not necessarily. And then,
It's only
uh,
the cherry on top if you sell it and take that profit,
exactly, because
and then
you
buy another bunch of,
exactly.
and then buy another bunch of rental properties.
But then,
And
Steve, everybody out there is looking for the shiny object, and when people want to invest in stocks, everybody's looking exactly like you say. Okay, I'm gonna looking for this AI that I'm gonna buy the stock at 20 pence, and I'm gonna sell it for thousands, and I'm gonna become a billionaire, and uh,
right,
and
that's
we need money every month. We had to buy food every month. We had to, I don't know, pay whatever bills you have in the house. You have to pay the school for your kids, and you don't cannot wait until something goes high to cover all those expenses. You need
right.
vehicles that can. However, Steve, and I know a lot of people. You are the only guy that I know that talk a lot about this, about how to invest in and prioritize the cash flow rather than the capital growth, which is totally the opposite than everybody's doing out there. So how do you come with this realization? For me, it was my own business showed me. So
Right.
every
For
time that I'm going
me,
to invest on something, I'm thinking exactly like you. I'm your photocopy, your little photocopy. You see,
well,
because I
there,
I'm so privileged in my life. I'm not an investor, but I'm so privileged in my life that things happen to me in my business that I had that breakthrough. So when do you came to that realization?
it was my dad. Guess what
Oh
my dad
wow,
did? Guess what my dad did
wow,
as a
didn't know
business?
that. Tell us.
He was a builder. He
Wow.
was he was a contract. He bought land. He built the roads. He built the infrastructure. He
Mm-hmm.
had the business. He built all the thing. He didn't build them by hand. He had contractors that did it.
Mm-hmm.
He had rental properties. He had ones he owned and sold. He'd sell them for them because he was a real estate agent.
Mm-hmm.
He wrote the insurance policies on them and for the automobiles. He loaned them. He took back the
Oh
mortgages.
wow.
He took
Wow, that's
back the mortgages. So he had, and as he and
very
his
impressive.
attorney, he's an attorney, had a lumber yard. So he had a vertically integrated business. He had a
Wow.
lumberyard business, cash flow. He had an insurance business, cash flow. He had rentals, cash flow. He had selling property and homes, not always cash flow. There's not always buyers, but he had all these other streams of income. And when I was working for this,
100%.
and
Oh, he
I
will
was
be
work,
very proud of you.
and
If
I
if
was
if
work,
you
he
you you
knew,
you
he
we
knew.
expand 100x that
Yeah,
philosophy,
I was working
the
for this.
continuity of the family, yeah.
Yeah, but I didn't go in his business. I didn't
Uh,
want to work. I didn't want to work 8 days a week. The downside
well,
of
you
real
find a
estate,
more powerful vehicle to do exactly the same result,
I
which is
did.
very
'Cause
impressive.
the downside of real estate is planning board meetings, inspectors, da
Takes
da
time,
da
takes
da.
time.
The phone
Uh,
phone calls in the middle of the night.
Compliance,
My
exactly like you
toilet is
said.
stuck.
Somebody need to sign a paper.
Well,
It might
well,
take
he was
six
doing it.
months.
This was back in the '60s. There wasn't a whole lot of that going on for him.
Wow.
But when he heard of the job that I had and the pittance that it paid, and that I had to commute to New York for that amount of money, he said, "You are crazy. You should be able to do better." And because of I was fortunate. I chose my parents well, so to speak. So I had an investment portfolio when I was 25, and I started to do the other thing. I started to build the dividend income. I started to trade. I started when they went up, I took profits. When they went down again, I bought them back, and I did it over and over again. And like I said, by the time I was 34, I said goodbye to New York City and hello to my own business. I became an RIA. I started managing other people's money, and I grew that business to the point where it was generating you know, a, for me, my third of the business was a half a million a year. And I did
Wow.
it with multiple securities
Hmm.
that it's the same kind of monopoly board.
Diversify, right?
Oh yeah, the same type of monopoly board you have when you're doing real estate.
Hmm.
Everything's paying me money.
Wow.
Everything's going up and down in price, and I can sell one and replace it with another.
And
I
they
don't
all
have any
producing cash flow, Steve. All of them,
all
right?
producing every one of them, and
Beautiful.
I don't have the expenses. I don't have the overhead of a development or real estate type
Hmm.
investment.
Hmm.
And nowadays, with the securities I'm using now, I can have REITs. I can have closed end funds that do nothing but commercial real estate. I can do all kinds of real estate investing within these closed end funds, within ETFs as well, with business development corps and REITs and mortgages and things like that. So I've got a real estate portion. I've got healthcare. I've got AI. I've got energy. I've got every sector.
Whatever
I've
is
got,
good and
I've
produce cash
got,
flow, you have your hands on it. Yeah.
I got everything. If one thing gets popular, fine, it goes up, I sell it.
Yeah, you will go there
Some
and say, look, it's popular, right? How much cash flow this thing can give us? First of all,
right
yeah.
today,
Yeah. No.
I'll tell you, I call them universes of securities that I invest in.
Mhm.
So I have a universe that just pays tax free. I have a universe that pays taxable income. I have a universe that's just basically stock market. And I have a smaller universe of ETFs that do the BDCs, the CLOs, the blah, blah, blahs. And the average income on the non-tax freeze is right now around 10%. Most of it's
Very
paid
impressive.
most of it's paid monthly, just like
Oh
rents.
my God.
Okay.
Uh,
The tax free, you're,
so you're
what would you
saving
say?
the tax
The
also,
tax
yeah.
free, the average tax free as of
Hmm.
10 days ago when I put the thing together, prices have gone
Hmm.
up a little, is set over 7%. Tax free.
Wow.
Tax free.
So Steve, so but people might think, oh my God, but those I wish that I want to do this, but in order for that, you need to have millions. You have to be a big hedge fund. You have to be. So how the little guy can get involved and
Let me tell you. Let me tell you.
experience something and
Okay.
have a small test so they can experience what we're talking about today.
See that? That's a
Uh,
list of tax-free
I cannot
income.
see it, Steve.
I know you don't have to read it, but you see how
Yeah, I
many
see
there
the
are.
paper. What I
You
see
see
the
how many
paper.
there are.
Yeah.
Okay. Tax-free closed-end funds. The average price per share, $10.37. The average yield, 7.17%. The average age is 27 years they've been around, and the average number of municipal
Wow,
bonds,
27 years. That's a very solid.
exactly, and they've been
That's
paying like this. And
wow.
the average number of actual municipal bonds inside, average 388 different bonds. So talk about diversification.
Mhm.
And these are
Steve, but the bonds pay a little bit less or between 7 to 10% also?
set the bond. These are tax free. They pay 7% average. The taxable variety, oops,
Hmm. Look
the
at you.
taxable variety, and
40,
I have,
a lot of
and
years
there's
of
and
experience.
there's over. How come I can't get this to show up? There it is.
Pages.
There,
Put it closer to the camera, I think. But
yeah, there you go. There it is.
okay. Oh
They're
my
over.
God.
They're over 100 of these. Okay, $12.04 per share on average. Average yield 10.4%.
Wow.
Average age 21 years old. Average
Amazing.
number of individual bonds or preferred stocks or mortgages, 466 in each of these funds.
Mm,
So diversification,
mm,
unbelievable diversification.
mm, mm.
Okay.
So,
So what about the stock market is your next question, right? What about the stock market?
mm-hmm,
Okay,
mm-hmm.
this is the stock market. And we're never going to see
Again,
these, Harry. There it
yeah,
is, Harry.
yeah.
And there are
Wow.
there are and there are 100 of these. Stock market. Average cost 15.40 $15.46. Average yield, and this was done as of September 12th. That was last Friday. Average yield $9, 9.11%.
Mm,
Average age 18, 43 years old. That looks,
mm,
I'm looking at it. Yeah. Okay. Average age 43 years old. Average number of stocks inside 240.
mm.
Okay. And this is just one form of security. These are closed-end funds. But there are ETFs that little more expensive. They average $25.
Yeah, but
A sh-
anyone can have a taste. If it's
Anybody,
20
any
$25, you can put $200, see how much this thing will pay you for a few months, right? And
sure.
and you can be a small guy testing something that someone highly experienced is sharing a
Yeah.
priceless knowledge, and
You
priceless is the word of
it's
so many years in Wall Street, and came out with something, a different mindset. And I think it's more
right.
sustainable mindset, Steve. That's why, like I
Hmm.
said, I'm always rooting for you and a big fan of you, because I find it very uh, more grounded, right? More grounded this style, right? Where you can have, I mean, we were discussing at the beginning of the podcast, we have this thing that entrepreneurs make money, make money, make money. But the fact that they're good entrepreneurs, that doesn't mean that they're good investors. And
Right.
some
And
people exit, make millions, and then a friend come, look, I have this. You give me all your money, half of your money. I'm gonna give you 30%, 40% return. And there is no one like Steve next to him that said, look, it doesn't really work like that. Okay, I've been doing this all my life. The returns are not realistic. For example, Steve, questions of people. Number one, okay, what in a dividend situation, okay, of a stock, okay. Of course, the bigger the risk, the higher the return, okay. But what is actually realistic in between how much percent of fluctuates what is realistic, and when you hear something that is not realistic, okay, um, that can give you a red flag in terms. We're talking about cash flow. We're talking about dividends, because you've been doing this for so many years, so
Yeah,
you can see that the thing doesn't add up, right? For example, let me give you a scenario. Somebody come, let's say that it fluctuates between 4% to 10%, and somebody comes and say, Steve, look, I have something. It will give you 20% return. I think the first thing you're gonna do is say, okay, hold on. How long these people have been around?
yeah.
20
How
years?
long they've been
20,
around?
how long
What?
they been around? 1 year? No way. You know?
Yeah. What are they investing in? How
Mm.
diversified is this thing? You know?
Who are they?
Yeah. Who are they? Who are these guys? Like I'm talking about people like Nuveen, BlackRock, Eaton
Mm-hmm.
Vance,
Mm-hmm.
uh, Gabelli. I
Mm-hmm.
mean, all these are names that you know about from the financial community. That's who manufactures these things and puts them out there for us.
So, Steve, what is realistic? And what is realistic in terms of
Realistic?
percentage? Let's say, okay, between
Dude,
4% to what, in what sector is realistic, right? And if the numbers going higher than that, somehow will raise a big red flag
yeah,
for you, and you need
they're
to go deeper. Maybe they are
yeah,
good, but this is something that will raise a red flag for you, and definitely you need to go deeper in the due diligence.
in
Um,
the let's talk about in the equity side where the most financial risk is as stocks going out of business and so forth. It's really a matter of management style. I mean, the Wall Street and everybody else talks about returns. What is what do returns mean? What does that mean to you?
for me, the money that I get after I invest.
The money you get. What they're talking about, you're talking about the money you get. You're talking about realized returns. These are dividends. These are rentals, rent
Hmm.
money that I am getting. That's my return,
That's the rent, yeah.
but it's a realized return. It's not just an image of a return. It's not a growth in market value.
It's not a
Walls,
graphic. It's not a graphic. It's not a number. It
no,
comes
no.
to you every month,
It's a
right?
dot. It's in the old pocket. It's got it. If it was
Monthly.
change, it would be jingling. You know, Wall Street talks about returns, and all they mean is the amount of change in the market value plus any dividends that we've reinvested for you. There's no
Hmm.
cash involved. You have a growth in the market value of your portfolio. That's the return. Can you spend that return? Nope. Can you spend market value?
You need to
Nope.
sell the stock.
You need to sell the stock, you need to sell the property, but with cash flow, can
There you
you
go. You take the
if
change, you
it's
go and buy food, no?
food,
You
clothing, shelter,
school
the
for your
three
kids,
basics,
your car.
college educations, health
Mm-hmm.
care.
It's monthly
Yeah.
bills, yeah.
Yeah.
You
I
need
mean,
you need,
and that's a
you cannot
reality.
go to the school to your kids and say, look, I have this graph, the stock is going up, I'll pay you after a year.
Yeah, yeah, yeah,
I'm
right.
gonna tell you, you
Sorry,
know,
Charlie. Sorry, Charlie. You need to give
or
us
go
a
to a
check
supermarket, go
or
to a supermarket,
your kid's out of here.
yeah, go to a
Right.
supermarket to see if it works. Just when buy all
It's
your
like a gold
groceries,
like
and
it's a gold brick.
yeah, yeah, show them a graph to the cashier and say, look, I own this stock. I'm not gonna pay you now, but after a year, wow, I can pay you double. Yeah, go ahead.
There you go. That's great.
Yeah, we
That's a
are,
great analogy.
yeah, we are, yeah.
So that's the difference. Most people focus on that market value.
Mhm.
Um,
And
most
the reason, Steve,
advisor.
is because the story. Let's go deep, because some people might be listening this podcast and they might think these two guys are crazy. Are we really crazy? Because the whole industry is all about this, exactly like you said, these big returns. You invested very little, and you make so
Oh,
because
yeah.
everybody wants to have this
How
amazing
do you think
success
some of
story. Yeah. So
what
how's
is
the rate? Yeah.
what is
What?
let's go ahead. I'm gonna look at something
Yeah.
while you're
What are the rates, Steve, or the chances of the that that actually people invest very little and make massive return? You hear one story, oh, this guy invested in Uber and wow, have an exit for so many. Oh, another guy, but this is very exceptional people with very exceptional skills. And
it's just like the lottery, Harry. It's like a
hmm
lottery. I go to the store and there are some people that they spend their time going to the lottery machine and you'll see them buying 20 or 30. These are poor people lining up buying $20, $30, $40 worth of lottery tickets because that's the only chance they have of ever getting out of where they are.
and by the way, most of them that win it actually lose it because they don't know how to manage money.
Well, it's the same
So it
like
becomes worse. It becomes worse.
it's like sports stars and people like that. They get these big bonuses and things and all of a sudden
Yeah.
it's gone.
I saw a documentary the other day that the high percentage NFL players they file for bankruptcy. How this
Yeah,
is possible? They go pay millions of their life.
because they don't
Uh,
know how to
well,
manage
they
their money.
yes, they're usually from communities that they are not developing financial, and what's the first thing they do? Okay, my dad is gonna be my financial manager. My uncle
Right,
is gonna be
right,
my
my dad,
uncle is gonna be my manager of
my
this.
dad, the
I need to have
mechanic.
my family. Yeah, exactly. Gonna be my family, and sadly, this is how end up. Rare exceptions. Okay, they have a well advised that said, you know what, someone like Steve that know how to
Well,
manage money
this
can get you few of this cash because you don't need that much money, Steve, to be honest with you, to
no,
enable
you
to
don't.
grow it effectively. Yeah.
You all you need is
I love your teacher,
direct.
by the way.
All you need is a
I'm gonna
direction.
mention it for the people that listen in the car and or in the gym.
Oh, okay.
So Steve is wearing a t-shirt that says "Retirement Money Secrets." That's your book, right?
That's my book. Yeah,
Show it to us.
it's
Show it to us. No, no, the
there. It
book, the
is.
book, the book. I can
The
see
book?
next to you.
Oh, the book.
Next
You
to
want to
you.
see the real thing?
Yes, yes,
I
yes,
thought you
yes.
just liked the way it looked on
No, no,
me.
no. Show them the book. Okay, here
There's
you
the book.
see it. So,
This
Retirement Money Secrets. Steve
and
Selengut,
it talks about
a masterpiece. Tell us, tell us. I want to know.
it shows you how to create those other streams of income. To take, you're let's say you're a doctor, you're a dentist, whatever, to take some of those profits and to put it into a sensible type of investing that produces a constant growing cash flow. When we look, I have a community of right now about it's almost 600 people
Wow.
who book readers and investors, and we communicate and talk a lot. And we talk about this generation of income, how all you have to look at is three things: the amount of capital you have invested, right? You reinvest in more properties, you have more capital. It's a monopoly board. You have more houses on the property. That they all produced income. So every one you add, the total income goes up. And this is the same way with distributions when you reinvest them and when you reinvest profits. You grow your capital, it grows your base income production. That's the income being produced by the
Hmm.
capital. And if you use Fidelity or Schwab or somebody like that, you get a brokerage statement, and each month it shows you your projected annual income for the next 12 months. And you want to see that number going up.
Hmm.
So if those numbers are going up, you don't have to worry about the market value going up or down. You don't have to worry about the economy.
It doesn't matter if the
You
stock
don't,
goes up and down because it will produce the income anyway, Steve, right?
the
Same like an
income keeps going.
example, same like an example of the house that I told you. This is a
Exactly.
real story. The stock, the house hasn't gone up in price in 16 years. Guess what? It still keep
Right.
producing an
It's a
income.
it's what this book talks about. It's like a process of taking the common sense of real estate investing,
Mm-hmm.
the common sense of generating that monthly income in rentals and applying it to stock market securities that pay significant amounts of income. And there are safe products out there that do just that. Their goal, their intention, their raison d'etre, the reason they exist is to produce income, not to produce market value growth. Produce income.
So, Steve, tell us how people can get involved in the community, how
Oh,
this process work, how if they want to learn more from you, how they can access any some resources that you can share.
well, I have a website, of course, called theincomecoach.net. It's that simple, theincomecoach.net, where we talk about the book, we talk about the community. You don't have time for the community. We talk about a course that you can take, which includes a couple meetings with me
Oh, wow.
and develop this on your own. And then, of course, after you get into it a while, you say, I should have joined that community because it'll give me the same education for quite a
And
bit
you're gonna
less
have a
money.
framework with everyone. It's not only Steve talking about. You're gonna have a group of
People,
people that they are already in the
right? And
same
it's
investment
not like
mindset.
and it's not like a Facebook group where you have people yelling at you or you have spammers. These are um, well-intentioned people that are there to help you.
Wow.
And a
How long you have been
critical
building this community, Steve?
the community started almost a year ago. We started
Wow,
last
year
December.
ago.
Last December,
Wow, very impressive
and
and
yeah,
amazing.
it's been
Okay,
so.
that's a great way because the again we're talking about this and people have been listening and said these two were crazy, but when you go to a community and you see a lot of people talking about it, say, well, actually,
We're
makes a
not
lot
so
of sense.
crazy after all, right?
Yeah, exactly. Make a lot of sense. And the other day, a friend told me, which is a big fan of cash flow as well, very good friend of mine. We're talking about this property, and he told me, Harry, look, if you multiply $2,000 monthly, pounds, yeah, for properties in London, if you multiply 2,000 pounds per month,
Per month.
and multiply this times 16 years,
Wow.
how much money is that? How much is
Yeah.
your mortgage? Who's making money? You thinking that the mortgage bank is making the money? Well, look at the numbers again.
And
You are making a lot of money out of this. You're making probably more money than that the people that give you the mortgage that usually make like 2 or 3 times, Steve, right? The money, right? Without the house going even 1 pound in value. Yeah.
value.
Just
There you go.
imagine that eventually property, in the thing, the reason why the property hasn't go up in value is because when was bought that property, it was bought at the sellers at the it was a seller's market. So it was at the
Yeah.
really, really top of the price. Everybody was wanted the
Mm.
property. Everybody was offering more than the property it was worth, and you had to kind of fight to get the property. And I think that the pay an extra 20,000 or 30,000 pounds on top of the real value because if you don't pay that money, uh, somebody else will get the property. But guess what happened? The month after recession
Yeah.
came and
Right. Right. Right.
woo!
There you go.
So
So
luckily
that
it was bought with that strategy in mind. It was never about the capital growth. It was always about the cash flow that the property can
right.
produce because I did this I saw millions doing this. So we knew that that property in particular doesn't matter what happened, recession, whatever happened, it will produce
The rents, yeah.
monthly cash flow per life.
Yeah.
And
The same thing is with in the stock market. You can do that too because you know where you are. You know if you're in a buyer's market. You're in a buyer's market right now in the stock market.
mhm,
The advantage of this approach is that you can buy less of what you're investing in. If it goes
mhm,
up, continues to go up, you sell it and you take your profit. If it goes down, you still don't have that much invested, so you can add to it when it goes down. So you can take advantage
mhm,
of the downward movement.
mhm, mhm.
Yeah. So
So
there's so much.
what message, Steve, do you have for number one for the entrepreneurs? Okay, that again, a good entrepreneur doesn't need to be a good investor. Yeah, I always say that. A good
But he
investor,
needs
a good investor is probably very good entrepreneur. They know how to analyze risk. They know how to how money works. They know how to buy business in the first place. They know uh, how money works because that's the other thing as well, Steve. In order for you to get money monthly, okay, what people need to do, you have to wake up early. Yes, you need to drive your car. You have to go to work. You need to be there 40 hours per week. Yeah,
at least
and that you need to do that for a month, and then the monthly income comes. So what if rather than you do all this, your money goes and do all that for you? Because money doesn't get tired. It doesn't. It
right.
doesn't work 24 by
It
7.
works
So
24 hours, right? And
absolutely
so
doesn't need day off,
here's some numbers. I
and you
use
will
two
get the
stream.
same monthly money that you do it working, right?
Right. But in addition to the income that we are talking about before, when I showed you that, I do another stream of income, and that stream of income is the profit taking. And what most people don't realize, particularly those people who are
Wow, profit take it. Wow.
the market value focused, they think if you were to take if you could take $100 in profits a trading day, there are 252 trading days in a year. $100 a day, which isn't much profit. Most brokers say $100. I'm not going to even push a button for $100. But $100 of profits a day is 25,000 a year. Not a bad number, you
Hmm.
know. So if you can be making $200 or $300 in profits a day, you're talking 50 and 75,000 a year. I'm at 90,000 so far this year already.
Wow.
Profits,
Coming
profits
from coming
Eh,
from those
from
investments.
from securities that are paying me 10%. When they go up, I
Very
sell them.
impressive.
I buy them back again. I sell them. I do it again. I do it again. I do it again. And my profits are in addition to the dividends that I'm getting.
Mm,
Now that
brilliant.
when you as an entrepreneur have some money put aside, and any successful entrepreneur has at least 100K around for emergencies. That's not the same as a COVID. Emergencies, has to get a new employee, something goes wrong with the building, so forth. But he's got other money and he's just handing it to an advisor
Hmm.
instead of vetting that advisor and telling him, I want this kind of income. I want you taking profits, at least as much in profits as I'm paying you in fees. That shows me at least you're working. I don't want some model portfolio that was put together in your home office in St. Louis and
Ah,
you tell me you're managing my money. If you're
ah,
managing my money, you're taking profits. Period. And if you're
ah,
not, I'll find somebody that will.
ah.
I mean, I we did a Q&A
Mm.
in the community where I talk about vetting an investment advisor and what that guy's got to be doing for you, what she has to be doing for you to earn her 1.5%. You want to be making 6 or 7% in income after expenses, and you want to have profits at least in excess of what she's charging you. Otherwise, they're not earning their keep.
Doesn't add up. Yeah.
Doesn't add up.
Yeah.
And that's what I used to tell my clients. I used to tell them two things, Harry. I used to tell them, I will never put you in a security that I don't personally own myself.
Wow.
Ever. You will never own anything that I am not owning. It's still true. And I will make much more for you in profits than you pay me in fees.
Beautiful.
So, and
And on top of that, they're
and
getting the
that's
money
not,
monthly, yeah?
yeah,
So
and
Steve,
that's not
if
hard.
somebody invests
You
like
should ask.
let's say let's talk about this, an entrepreneur have an extra 100,000, okay? And they have it in the petty cash of the company for for emergency, right?
Right.
If they take this 100,000, right, and they spread out in a diversified, well managed security investment, number one, they can have, right? Correct me if I'm wrong, how much monthly they can expect coming out of this 100,000 after your fees covered and everything.
Probably just
Let's say
around a
that the
thousand.
entrepreneur want to maximize the cash flow because he want to use this money for marketing. So say we discussed before the broadcast, okay? Right now have this 100,000 sitting there, right? You put it on the stock, okay? These or you put it in a vehicle that give you a monthly cash
Income.
flow. And guess what? If one day the big emergency happen or whatever, well, still you have your own the thing, you can actually sell it. But probably you won't get into trouble if you have this monthly income because you have money for marketing coming, right? And for sales, you can grow your company, you can pivot, give or
Mm,
take.
yes, and
Yeah.
other risks involved with
Other
that.
risk, yeah, owning
Uh,
a business. Look,
I
Steve, the other
think in a
day,
business, you got
look,
to have that money that you don't have.
yeah, the other day
You
my
want,
brother called me. The other day my brother called me, and he has an import and export business, right? He bring a decoration product from Indonesia, right? He sell it all over Europe, right? A big operation, and he's based in Spain. And he called me the other day. He said, "Harry, have you seen the news?" I said, "Which news?" I said, "You're not gonna believe what happened. It was a fire 9 miles away of the warehouse." I said, "I'm thinking that was far," and he told me the wind blew almost the 9 miles, and the fire just had been stopped 200 meters away from the warehouse. And it was even worse. I couldn't even get to the warehouse because the fire brigade closed the whole thing. And the only answer that I gave to my brother was, man, the only thing that you need to be, not that thing happened to you, is being in business. If you know in business, you're not in business, that crazy things won't happen. But you're in business, welcome to my life. Any crazy, any crazy weird thing will happen, can happen. And let's not talk about
absolutely.
COVID. Let's not talk about this. Look at me, we're running this business, doing multiple events like a rock star live all over the world, Singapore, Mexico, Peru, thousands of people speaking tours, with tens of thousands of people waiting for us. We arrive, they pick us up in the car, that give us a red carpet, they put it in a hotel. Then, Harry, this morning you have to speak here, then in the afternoon here. And like this, we're doing speaking tours and everything going amazing. And I left to Peru for a speaking tour. And when I arrived there at the second conference, they told me, Harry, that's it. The first one they told, it was like 800 teachers. Said, oh, you only going to teach 400 in the morning and 400 in the afternoon. I'm thinking, why these people are splitting the people? Why they want me to work double and they want to split the teachers anyway? Why it's not be better to do it once with all of them as usual? And the next day they told me, no, the airports are closed. I got stuck 111 days in Peru because of
Oh,
COVID. And guess what happened with all live events? Guess what happened with those speaking
well, you,
tours? Guess what
but
happened with
you got to Machu Picchu though, right?
Oh, yeah, 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 yeah. With it was amazing though because it was very good weather in Peru. It was better to stay in Peru. Weather was amazing, food was amazing, and we were lucky that we were in a compound there of the speakers that we could get out. It was like a
Uh-huh.
on medical service there, so we didn't need to be inside the house. That would be very difficult for
Yeah,
me. I like people, but anyway, that's a story. That things that can happen when you're in business. So, Steve, so how much if someone put the 100,000 and let's say the portfolio of dividends and is kind of well balanced, and of course, this want to maximize return. How much monthly cash flow this entrepreneur could be expecting with, we can say, low risk? We're not going to say no risk because, every time you
There's
invest, there's
always
risk
some risk.
involved.
Yeah.
But with the
Always
let's call it deep due
diversified.
diligence, diversification on every security that you own, by the way, in the first place. So how
Mhm.
much return monthly they could be
Well,
expecting after your fee?
up to.
Ballpark.
Oh, I don't have a fee, so that's
Uh,
easy
You
to
don't have a
say.
fee?
No, they're managing
So
their
how
own
you help
portfolio.
them?
If they're managing their own portfolio,
You show them how to do it?
I'm teaching them how to run
Wow.
portfolios. I'm not doing it
Wow,
for them
amazing.
anymore. So they
They won't be
learn
able
how
to
to
afford you anyway, no?
they pay they I'm pretty cheap to teaching, and once they get into the community, it's a annual fee of $350, and they get all
Oh,
the education. There's a whole course in there and all kinds of Q&As for questions and so forth, and they do it themselves, or they could even have a secretary take care of the most of it if they wanted
mm,
to.
mm.
But they're going to make 10%. Right now they can make easily 10%, and that's without the
That's a
profit taking.
very good,
That's
very
without the
good.
profit taking. Without the profit taking.
That's amazing,
And
Steve. It's fantastic.
yeah, and it's
With this,
because they're
making.
using securities that are designed to produce income. They're
Break
not
it down,
using.
Steve, because some people, they, they don't understand returns or things that by listening to the podcast. Remember, they are entrepreneurs; they don't understand the terms. So, 100,000 in investment, right? And put in those securities, well elaborated and everything.
A
10%. So
thousand a
10%.
month. A thousand
There
a
you
month.
go.
1,000 a month per hundred. That
1,000 a
they
month per
per
100
yeah.
per.
They get
Okay.
it's 100,000.
Yes,
They get 1,000 a month. They get 200,000. It's 2,000 a
2,000 a
month.
month. There you go.
Okay.
So,
So
and then without the profits, and let's say taking out the profit. The profits, when can you take them out, Steve? At the end of the year? How you take these
oh no
profits?
no,
How
you
people
take
take
them
the
when
profits?
you take prop. You're walking down the street, Harry, and you see a $10 bill.
Hmm.
You pick it up. You don't
Yeah.
wait till the end of the year to pick it
Ah,
up. It may not
can
be
you take
there.
it? Can you take it at the? Can you take it monthly, the profit?
Sure, you take the profits
Wow.
whenever they appear.
Wow, that's amazing.
you're trading on the stock market. Like I could
Which
go
have
to my
nothing to
portfolio.
do with your 1,000 that is coming anyway. This is something extra, the profits, right?
Yes, yes, different. You look at the security, it's up 2%. You take a profit. You push a button, bing, you sell it, you take the profit. Later in the day, you buy the thing back again. Or you buy something else.
Yeah. Wow.
So it's that.
That's fantastic, Steve. Steve, thank you so much as usual. I mean, like I said, I'm a big fan of you. Yeah, I'm always rooting the way you think. And I want to thank you so much for the difference that you can make in people's life, and to be an investor or a teacher,
Yeah.
that
Well,
is
I'm doing
kind of grounded, and
um
can train the people to see something different, right, than going to the shiny object, because behind the shiny object there is always, unfortunately, a huge risk involved. Yeah, and something more wise thing to do is to educate yourself, to learn other vehicles that have been there for 20 years, 15 years, that have a history, that have a track record, and have someone with so many years of knowledge behind that can guide them and teach them,
mhm,
right? Look, I'm very
right.
impressed with the community that you have built. Well done. So, again, Steve, can you share your website for our listeners one more
It's
time, please?
theincomecoach.net.
That's fantastic. So, Steve,
Okay.
once again, thank you so much. I'm so happy you made my day. I'm every time so happy to see you. Yeah, when I saw you, I say, "Oh my God!" So, and this is, I'm so happy, and it's very inspiring what you share. And like I said, I'm your biggest fan. I'm always rooting for you. So,
Yeah,
for all of you, yeah, last
I
message, Steve. Last
No,
message
I
for
just
the
said
audience.
I feel the same about you. It's always a lot of fun to get on and talk with you.
Thank you, Steve. And for all
I
of
think
you
I've been
watching,
I
yeah.
my cheeks are a little sore from smiling so much, you know? That's a good conversation.
Thank you so much, Steve. And
Appreciate it.
for all of you following the broadcast, see you in our next episode. How brave entrepreneur like Steve break the wall and achieve the first million. Bye for now.
Follow us for more on charismatic speaking, leadership, exponential business growth, branding, marketing, strategies designed to help you monetize your knowledge, find true happiness, and manifest your goals and dreams.